Welcome everyone to another edition of the Health Insurance Store Webcast now. New Webcast, no longer podcast. This is the show where we talk about all things health insurance, individual, Medicare, group health insurance. We do a lot of focus on Medicare here at the Health Insurance Store. This is our weekly podcast where we discuss in depth the question that I took and wrote about in the columns I put in the Post that run in the Post Gazette every Friday on page A2, every Tuesday on page A7 in the Trib. Again, Friday Post Gazette, Tuesday in the Trib, and we're going to go into more in depth about the question that we received. I want to just give you a brief message of what we do at the Health Insurance Store. The name applies at all. What we do, we're a place you can come and shop for all things health insurance, individual health insurance in case you are self-employed. You own a business, a small business where you can't get health insurance. You work for a company who does not offer health insurance. We can go ahead and help you in those areas as well. Group health insurance, obviously, if you own a small business, a great way to attract great employees and retain employees is to offer them health insurance, group health insurance benefits, medical, dental, vision. We can do all that kind of stuff for you, Aflac policies, those types of things. So if you open a new business, if you want to get a new group quote, I highly recommend, I always tell people who say, I can't afford to give my employees insurance. I say you can't afford not to. We'll talk about that in another podcast. And then our biggest thing we do here at the Health Insurance Store is we help those people on Medicare. We've helped well over 10,000 people, advise them, make sure they're getting the best plan for their money, the best value. And what we're very proud of here, one of the things I'm most proud of here is how we take care of people after we've provided you a plan, after we found you that great, the best plan for your money. We're here in case you have bills you don't understand. You show up at the pharmacy and someone says, that'll be $400 for your prescription drugs. We don't want, before you, faint when you hear that price, we want you to call us, let us figure out what happens, what happened, why that is. Get involved. We advocate for our clients. We get involved. It's not a matter of if you're going to have some issues with health insurance. It's a matter of when. Insurance in general, and we want to make sure we're there to help you with that when problems arise. So let's get back to what we do again. We go in depth on the question that we receive in the columns that I write called Ask the Medicare Specialist. So let's talk about the question, our most recent question received from Teresa. And the question is, I just got notice from my supplement plan that my supplement plan premiums are going up again over $20 per month. They rise every year and seem like the increases just keep getting larger each time. What are my options? Is the question from Teresa. And the answer, and before we get into her options, I want to discuss the dynamic of rate increases on supplements, which are also known as Medigap policies, okay? Supplements, you're going to hear the word supplement, you're going to hear the term Medigap. They're the same exact thing. I love the term Medigap. It's very self-explanatory. That means designed to cover the gaps in Medicare. Basically, the gaps in Medicare are the 20% that Medicare Part B doesn't pay, and it's the $1,408 of your hospitalization that Medicare doesn't pay for the first 60 days in the hospital. So we want to talk about the dynamics of those, which include what causes them, why some plans go up higher and faster than others, or some companies go up faster than others, and as well as Teresa's statement that they seem to be getting more dramatic, her increases every year as she gets older. So I'm constantly writing about the differences between Medicare supplements versus Medicare Advantage plans and the importance of understanding those, as well as the pros and cons of both policies. If you want to go back and see some archived podcasts, we get into that a lot. I do a lot of columns on those. I do radio show on WMBS Uniontown the first Mondays, the first and third Monday of every month from 1:15 to 3 o'clock. That's 590 AM, 101.FM. You can also catch them on their website, which is www.590am.com. You can Google WMBS and listen from their website. But again, Advantage Plan supplements. If you're turning 65, if you're on Medicare and you don't know the difference, the number one most important piece of information you can have. That's what we do here is we educate our prospective clients, our clients. Again, number one most important thing you need to know is the differences between Advantage plans and supplements. We're going to talk more about supplements today. And the number one negative of supplements for people is the cost. And that's, in my opinion, the reason why you wouldn't take them is the cost. Generally, they're a little higher than they can be higher than Advantage plans. They can actually be less expensive from Advantage plans if you're not careful about which one you choose. But the reason why you take Advantage plans is to save money on supplements, as far as I'm concerned. So now supplements start out very reasonable. They're as low as $85 a month for a 65-year-old and $111 a month for someone 75 on the most popular plan amongst our clients, which is Plan N. Now, supplements come labeled with letters. There's no fancy names for these. If you're we're 65 prior to 2020, you have the choices of 11 plans: A, B, C, D, F, G, L, M, N, K, and FX. Those are the choices you have. If you were born after 1955, you were born if you turn 65 after January 1st of this year, you no longer have the choice of Plan F or Plan C, so there's only 9 choices you have. The most popular are Plan N and Plan G, although there are a ton of people that have Plan F, and no one should have Plan F as far as I'm concerned. If it's avoidable, we're going to talk about that. So again, we just discussed about how inexpensive rates can be for people when they're 65 to 75. We're talking about between $85 a month and $111 a month. That does not include prescription coverage. Now, if you take a supplement instead of an Advantage plan, you do have to go out and purchase a prescription drug Part D plan, which is going to generally cost between $15 and $25 in addition to those premiums. So again, the one negative of Advantage plans is, you're looking at between $100 and about $136, $35 if you're in between 65 and 75. However, as people get older, rates can become expensive, and they can even be burdensome or unaffordable for seniors at times, especially those on fixed income, and especially those who choose a plan or company that has a history of larger and more frequent increases. So when I just talked about that plan letters have you can buy A, B, C, D, F, they're all the same no matter what company you buy them from. Doesn't matter. We're going to talk about that as well. But you could have Plan N with one company and Plan N with another, and your rates with one company are going to go up much faster and much higher than the other company. So these are the kind of the nuances of supplements that we get into. But here's the deal: supplement rates are guaranteed to go up. It's not a matter of if; it's a matter of when, how often, and how much. And these rate increases are generally due in part to medical inflation. And medical inflation almost always outpaces general inflation. Medical inflation is historically 6 or 7% every single year, as far as what an MRI costs, what a CAT scan costs, what an X-ray costs, what it costs to get blood work evaluated, all of those things. Prescription medications have gone up, 400% in the last 7 or 8 years. Just crazy, outrageous. So that's one reason why supplement plans are going to go up, because as the companies have to pay more, as a supplement company, their 20% of that MRI goes up, they've got to charge a little bit more money to cover that. Now, most Medigap policies have 2 different types of increases. The first one is what's called age obtained. This means once you turn 68, premiums are going to go up every year as you age. So you get a year older, your premium's going to go up. And that starts at age 68 and doesn't stop till you turn 90. So again, every single year guaranteed. So on Plan N, and the companies that we use the most, from ages 68 to 72, the annual increase is going to average between $2 and $3. From ages 73 to 77, they're going to go up $4 or $5 every single year. So in other words, if you start out at 85, you turn 68. At 68, you're going to get a $3 increase, $2 to $3. At 69, you're going to see another $2 to $3. At 70, you're going to see another $2 to $3, et cetera, et cetera. And again, when you hit 73 to 77, expect a $4 to $5 rate increase. From 78 to 82, a $5 to $9 rate increase. And from 83 to 90, this is $7 to $15. And be advised, this is on our least expensive company's Plan N. And the company we use most often, or one of the 2 we use most often, doesn't have as high of the other type of rate increase as many of the other companies that we're constantly moving other people to, that from outside that come to see us. They're moving from a more expensive company's Plan N or G or F to the companies that we use, Aetna and New Era most often. And we're gonna talk a little bit more about those companies as well. So again, be advised, those rates I'm giving you, those spreads, The $2 to $3 from 73 to 77, the 4 to 5 from 78 to 82, the 5 to 9 from 83 to 90. Those are on Plan N with some of the least expensive companies. Those who choose Plan F or G, those increases are going to be slightly higher. And if you chose a company that rates that start higher, in other words, I quoted 85 to 111 for somebody, 85 a month for somebody 65, 111 for a female 75. I just looked at, I just looked at Plan G or Plan N with another company. Instead of 111, it's 148. So you're going to see higher rate increases year to year because they started higher. It's just the way it works. Again, another nuance. So you can see larger increases than what I just said, depending on the company type. So that's the first type of rate increase. Again, age obtained. Every year you get older, once you turn 68, they're going to raise your premiums a little bit. The second type of rate hike, all supplement policies employ. There's age obtained, there's community rated, and there's age obtained. There's three different types. We sell age obtained most of the time. We do a business with AARP, which is community rated. We do some business with them, but I don't care which type of policy you have, age obtained, community rated, or age rated. All companies are going to employ what we call, an across-the-board rate increase. So companies can raise every letter plan. They sell the same percentage. They can raise some letters more than others. In other words, this is a percentage they're going to have. So we just had a situation where we had a rate increase on both companies this year that we sell the most, New Era and Aetna, and then Highmark had a rate increase as well that was what we just found out about. So it was 5%. So again, let me talk about this. They can raise rates on every plan across the board, A through N. They can raise rates on some plans, 1%, and then a slightly less or more on other letter plan, or they can raise rates on some letters and none at all, or a few letters and then a couple others, none at all. So with New Era, we had a 5% rate increase on every single plan, A through N. On every single plan with the exception of Plan N. They raised rates on every single plan except N, and Aetna raised rates on everybody 5%, including Plan N, and Highmark raised rates 7.7% on every plan. We've had years where they've raised, Plan G 9.5%, or Plan F 9.5%, and Plan G 5%, Plan N 4%. So again, it's confusing, but here's something that keep in mind. These companies can't raise rates just because they feel like making more profit, right? Because the CEO wants a new private jet. Or he just, his mistress wants a diamond or wants a new apartment. That's a joke, by the way. I want to try to be funny every once in a while. I'll try to be funny. They have to prove that they're in danger of not making a profit, or they're not making a profit. They can't just willy-nilly raise rates. Listen, insurance companies get they have a reputation for a reason, but they can't just do this. So what they have to do, they have to request those increases here in Pennsylvania through the Pennsylvania Insurance Commission, and they have to prove that they're in danger of not making a profit. And they have to actually share their financial statements before they can raise those rates. So again, we just got news on this type of rate increase from New Era, where rates went up 5% on every plan, but Plan N. And this is a trend we've seen for 6 or 7 years now with both New Era and Aetna, the companies we write most of our supplement business with. And it's also why we recommend Plan N more often, is they just don't raise rates on Plan N as often as they do G. And again, to explain that's because Plan G didn't perform as well. In other words, they're in danger of losing money on that plan. They're not making as much profit on Plan G. And N, the people that are in Plan N, they didn't have to pay as many claims out. Therefore, that plan's more profitable. They can't go to the insurance commission and justify a rate increase for Plan N because they're making money on it. And again, that's the reason why we recommend Plan N. Historically, Plan G and Plan F, especially F, has gone up much faster and on a year-to-year basis more often than not. And so, New Era and Aetna, why we like those companies so much is they do have rate increases like they did this year across the board, but they don't happen that often. And when they do, they're not that high. So with Aetna, this is the first rate increase we've seen on Plan N in 5 years. Now, in the same 5-year period, they've raised rates on Plan G 3 times, 5%. But they've only raised rates on Plan N 1 time. And so one thing we're looking at when we're advising what company you should choose and what plan you should choose, how often have they what's their history of rate increases? How often and what percent? So again, when we're talking about N, G, and F, those are the 3 most popular plans of all time with supplements, or actually in the last, let's call it in the last 15 years. But rates are significantly lower on N to start, and the benefits between N, G, and N are almost negligible in what's covered. So the difference between F and G is so simple. Plan F, you don't pay anything. So it covers all the gaps in Medicare. There's never a medical bill for an approved Medicare service, covered service. Plan G works exactly the same as F, except for one thing. You'll pay a $198 deductible. So you pay $198 in bills, pay your deductible, and then you're done. So if Plan F, can be $400, $500, $600 more a year, and all you're getting is a $200 deductible pay, it makes sense to take Plan G. As far as Plan N goes, it works just like G. So when with G and N, when you meet your deductible, you pay that $198. You won't pay for blood work, X-rays, CAT scans, MRIs, hospitals stays, chemotherapy, radiation, skilled nursing, durable medical equipment. None of that with both G and N. The only thing you'll pay with N is there's a $20 copay at a primary care doctor or specialist and $50 at the emergency room. So again, we're always looking at how much money we can save, because that's a very small difference in what you're covered. What we want to make sure is covered is chemo, that can be tens of thousands of dollars, skilled nursing, which can be tens of thousands, injections at a doctor's office for in infusions like Remicade. We want to make sure that those don't cost anything. Don't cost anything with N or G once your deductible's been met. And again, that deductible's tiny, $198. Again, why do we use New Era and Aetna almost exclusively? Because except for about 6 months since 2008, they've been the least expensive supplement companies in Western Pennsylvania, period. That's it. So Plan N is Plan N is Plan N, and G is G is G. Doesn't matter what company sells it. Your access to doctors and hospitals is the same, and and what you pay out of pocket's the same, and your benefits are all the same. So let's get back to Teresa and what we've just talked about. So I'm betting Teresa's in her early 80s, and one of the reasons why her rate increases seem to be higher every year, she said over $20 this year, is because, again, in her 80s, it might be going up $9 because she aged. 3 years ago, it might have only gone up $6 when she aged. Now it might be going up, it might have gone up $12 or $15 just because she went from 82 to 83. Okay? I'm also guessing she has Plan F or Plan C, and that 5% or 7%, let's say she's got Highmark and went up 7%, and she's already paying $200, a higher premium than she would be paying if she's on New Era or Aetna. There's 15, there's 16 more dollars, plus the 14 that she, 12 that she aged. There's 20, $26, $28 that her plan went up. So I'm guessing she's in her 80s. She's got Plan F or C, which are higher dollar, and I'm guessing she also is probably not with the 2 companies that I just mentioned. So what can she and others in her position do? What are her options? First, my advice is, this is for anybody. Stay away or get away from Plan F and move to Plan N or G immediately if you qualify. And when I say if you qualify, you got to pass medical underwriting. They're going to ask you a series of medical questions. If you can answer them all no, you can move from one company to the next, from one letter to the next. I don't want people to assume they won't qualify. If if you've had some cancer in the past, you've had a heart attack. Again, they're most of those are time sensitive. A lot of those questions, have you had cancer in the last 3 years? Have you had a heart attack in the last year to 5 years? So don't think, I had a heart attack 7 years ago, I can't change. Yes, you probably can. Don't assume. Don't ever assume. Just pick up the phone and call us, and we can get that information out to you. I didn't give the phone number and website out yet. Shame on me. Phone number here in the home office in Connellsville is 724-603-3403, 724-603-3403. We also have an office in Forest Hills in Pittsburgh, another in Erie. The website is getyourbestplan.com, GETYOURBESTPLAN. You can email me personally if you'd like at Aaron, AARON, at getyourbestplan.com. So again, don't assume anything. Pick up the phone, call us. Hey, I'm interested in getting, I'm on Plan F or Plan C. or I'm on Plan G, my premiums just went up. Don't assume you won't qualify. Let us worry about that. You might be surprised. Each company asks different medical questions too. So you might not qualify for Aetna but New Era, or you might not qualify for New Era, but you will Aetna or AARP, which we also use. Those are the three companies we use most often and 99% of the time. Again, because they're the least expensive. With AARP, their niche is they don't ask as many medical questions, and they don't go back as far on how long have you had cancer or whatever. So they'll accept more people, and their rates are pretty good as well. So again, my advice: don't take Plan F. Period. If you're on Plan F, get out. Let's get you to enter Plan G immediately if you qualify. Many may want to consider a move from G to N even, especially if you don't have a policy with Aetna or New Era. I'm here to tell you, if you don't have a look, I'm going to move closer. Okay, listen. If you don't have a policy with New Era or Aetna, you are paying too much. You won't believe how much extra you might be paying. You can move from F to F or G to G or N to N from company to company, save $40, $50 a month without doing and have the exact same benefits. Moving from F to N could save you a ridiculous amount of money, $1,200, $1,300, $1,400, $1,500 a year. You'd be shocked. And again, those benefits are what you're covered for is so minimal. A lot of people are fearful to change. We're going to talk about that here in a moment, but don't be afraid. Just pick up the phone. We'll talk to you about that. So a couple things again. Move from F to N or G immediately. Consider moving from G to N. Okay? If you don't have a policy with Aetna or New Era. Those who don't, again, are paying higher premiums for the same exact benefits. Now, remember, supplements are highly federally regulated. The name of the company has nothing to do with what is covered or what doctors or hospitals one can use. Plan N is Plan N is Plan N. Plan G is Plan G is Plan G. Whether you have AARP, Cigna, Mutual of Omaha, Bankers Life, Highmark Medigap Blue, Humana, AARP, which I mentioned again once already, Aetna, New Era, or any of the other 100 or so companies that offer Medicap supplement companies in the U.S. If you ever look at Center for Medicare and Medicaid Services annual book they have, it's called How to Choose a Medigap Policy. It used to be highlighted, but it says this is an exact quote from that book, the only difference between Medigap policies with the same letter sold by different companies is cost. That's it. Remember I just said with Highmark, Plan N's $148 for $148 for somebody who is 65 years old, and Plan N can be as low as $85. That's a $57 difference for a 65-year-old female from one company to the next with the same exact medical benefits. Okay, the only difference is cost. Just because you have Highmark doesn't mean you can go to the Mayo Clinic and you can't with New Era or Aetna. Any doctor who accepts Medicare assignment will accept your supplement, regardless of the name of that company. It means nothing. There's companies you've never heard of. Lumico. What the heck's a Lumico? GPM. I don't even know what those three letters stand for. There's Manhattan Life, Thrivent Financial, Oxford Financial, just off-the-wall companies. They offer supplements. It doesn't matter that you've never heard of that name. It doesn't matter that you've never heard of New Era. When you call a doctor, you don't say, do you take New Era? Do you take Lumico? Do you take Highmark? Do you take AARP? Do you take Aetna? It's do you take Medicare? The doctor, whoever answers the phone says, yeah, sure, of course we take Medicare. Well, can I make an appointment? Absolutely. We'll make you appointment. You show up, you give them both cards, boom, you're covered. They'll know exactly what's going on. Do you know doctors and medical providers don't bill the secondary company? Do you know if you have AARP or you have Highmark Medigap Blue or you have Aetna for your supplement, do you know the doctors don't bill them? They bill Medicare. Medicare has it on file who your supplement's with, and then Medicare gets the claim from the provider, and they tell New Era or Aetna or Lumico or Highmark or AARP or Cigna or whomever what they owe and who they owe to. Okay, you owe Shadyside Hospital $1,408, which is the hospital deductible for days, as many as 60 days in the hospital. You owe Lab X, you owe Quest Diagnostics, $300. You owe Quest Diagnostic $200 to pick up the 20% of that MRI that so and so got. So that's how it works. They don't bill two companies, so the doctor doesn't care who your supplements with. They're going to get paid regardless. In case also you weren't aware, there are no election periods when it comes to changing from supplement to supplement. It can be done anytime, not just from October 15th to December 7th, which is the only time those on Advantage plans or Part D can make changes, with exceptions for those who have what's called a special election. We're not going to get into that much today. But if you want a lower supplement cost plan, you can change right now. If you're listening to this and you're saying, oh my gosh, I got Plan F, what am I doing? I got Plan G. I should with a company other than Aetna or New Era. You can call us if you can pass medical underwriting and you save a bunch of money, which I guarantee you can. You can change right now. We can have you your new plan effective for you July 1st. Now, if you're watching this another time, again, we can have it effective for you the first of the following month if you want to change. And there's no election periods with supplements. Only with Advantage plans and with Part D plans every year are there limits on when you can change. So that's the one option is, again, moving from supplement, one company to another company, from one letter plan to another. Again, if you don't have Aetna, if you don't have New Era, I'm almost guaranteeing you're paying too much. 99% sure you're paying too much with letters we know N, G, or F. We talked about moving from F to G, or from F to G or N, or from G to N even. And the other option, and one we're actually encouraging our clients to consider once their monthly premiums for our Medigap policies, including their prescription drug plan, get into the $250 to $300 ranges, we're actually we're doing this actively right now. When we saw these rate increases, we're going back in, seeing what our clients' rates are, and we're calling people up and saying, hey, listen, we see here that your premium's gone to $285 a month on your supplement, and we think you might want to consider an Advantage plan. And here's the reasoning. Let's say you're paying $300 a month for your supplement, right? That's $3,600 you're spending before you even got out of bed in the morning, before you went to see a doctor. If you're paying $400 a month, we meet those people all the time. Usually not our clients, because we're being pretty proactive in making sure they're not paying that much. We just think you're paying $4,800 for a premium. That doesn't include, again, you're going to pay that whether you go to a doctor or not. So when it comes to Advantage plans, now with Advantage plans, one of the negatives is that they're co-pays for everything. So again, we talked about Medigap policies. You pay a small deductible and either a small copay for a doctor visit, emergency room, and nothing else, or nothing else. So you pay $200 with Plan G, never pay another dime for anything medical. Now, one of the negatives of Advantage plans is you're going to have copays for virtually every service. So all those things I rattled off, remember when I said there's no copay for but with Advantage plans, it's opposite. Well, you are going to pay for copays for specialist visits, generally for blood work, definitely for x-rays, for CAT scans, for MRIs, for hospitalization, for surgeries, chemo. All those things are going to have copays. Some can be higher than others. So you can pay maybe as little as $10 for a blood work, $5 for a primary care doctor, $25 to $40 for an x-ray, to a couple hundred for an outpatient surgery or an MRI, to maybe a couple thousands for a lengthy hospital stay or chemo. But there's what's called your maximum out-of-pocket. We also refer that to the MOOP, maximum out-of-pocket. That's the acronym MOOP. Those run as low as they can be as low as $3,400. So a couple of our most popular plans historically have MOOPs, and one of them are the most popular plan among our clients, and I'm not allowed to mention companies' names when it comes to Advantage plans, unfortunately, has a $3,400 maximum out-of-pocket and a zero premium. So there's no premium. That's the best part about Advantage plans is the money you can save on premiums. So let's say that somebody who's spending $4,000, or let's say $3,600 on premiums, their premium's $3,000, okay, or $3,600, $300 a month. Well, they're spending more in premiums than what the maximum amount of bills they could get from going to an Advantage plan. And the only way they could get to that, the only way they could get to that $3,400 is if they had chemo, wound up in a skilled nursing facility for any length for 40 to 60 days, needed a lot of radiation, needed a high-dollar piece of durable medical equipment like expensive wheelchair, needed a prosthetic device, which is pretty rare, an artificial limb. And something that's becoming more and more common now are getting expensive injections or infusion therapy in a doctor's office. This is another thing in Advantage plans that can be quite costly. We have a ton of clients getting Remicade, which is an infusion therapy that people get who have severe arthritis, Crohn's disease, among other things. They get it every 4 to 6 weeks, and those infusions cost $2,000 a piece, and with Advantage plans, you have to pay 20%, which is $400. But again, it doesn't matter if you're spending $4,800 in premiums, and the worst you can do is $3,400 in bills, and your premium is zero. Where did we save more money? Even if you met your out of pocket, we still save $1,400 by going to Advantage plan, even when you're shelling out some of that money for bills. And that's something that we come in hand. Okay, that's what we do. We're going to evaluate this thing for you. If you came to me and said, Aaron, I'm paying $180 for my supplement, I'm going to do the math for you and say, listen, you can go to an Advantage plan if you want, but if you take a plan, if you have a plan that's $3,400 out of pocket, you could meet that, and you only spend $1,800 on you only spend $2,000 or $2,200 on premiums, but your exposure to bills could be $3,400 to $6,700. We've got to talk about that. That's what our job is, to lay all that stuff out in front of you and let you decide. Okay, then you can ask us questions, and we're going to kind of bounce our ideas and maybe our advice on you. Supplements aren't for everybody because of the cost, and Advantage plans aren't for everybody because they're $0. Okay, let us take care of that. That's what we do. Basically, again, once the cost of your annual premium on a supplement approaches or exceed the MOOP, the maximum out of pocket, supplements no longer offer the same value they once did. It's certainly not the value when you're paying $85 a month for your supplement at age 65, or let's call it $100 for easy math. And that's only $1,200 out of bill, so you're paying $1,200 to get rid of the risk of paying $3,400 to $6,700 in bills. That's a good value. Well, when my premiums are $400 to $400 a month, when they're $3,600 to $4,800 a year, the value to avoid $3,400 to $6,400, $6,700 in bills is not the same anymore. It's definitely not the same if what you're paying in premiums are more than what you could possibly receive in bills with an Advantage plan, HMO, or PPO. So again, we if you're paying $250 to $250 or more for your Advantage plan, we advise you to take advantage of our. Again, we don't charge for consultations. You could come into the office. We are going to start seeing people July 1st face to face finally. But if you want to, come in and sit down with an agent face to face, if you want to call us over the phone and go over those options, if you want to do a Zoom meeting, we can do it just like I'm doing now. I get in front of my computer, in front of my camera, and just chit chat with you, and I can toggle back and forth, and you can, see documents that I would normally go over people face to face. We can do that too, but we don't charge for those. So call us up. Let us evaluate that for you. Bring in your son or daughter, your niece or nephew, your brother or sister. Let's talk about that. Let's get a different set of ears and go over those scenarios and compare and contrast Medigap policies. Plan N to Plan G to Plan N, Plan F to Plan G, and et cetera. If you'd like to get a quote on different supplements or discuss moving from a Medigap policy to an Advantage plan, again, please call, email, or visit the website. We don't charge for any consultations ever, over the phone, in person, or via Zoom meeting. The phone number, again, in Connellsville is 724-603-3403. You can call us here whether you're from Pittsburgh or the Fayette County area. We set your appointment at either place, or a phone appointment with one of the agents or myself. And again, don't forget to listen to the podcasts on the website. You can go to archive columns, the last archive columns and archive webcasts now. We just did a really important webcast, in case you missed it, on the extreme costs of diabetic medications, insulin, non-insulin injections, and so on and so forth. There are some foundations now that have really going to help a lot of people get their medications for free and save people, between $1,000 and $3,500 or even more per year by not having to pay for diabetic medications. Go back and listen to that. Facebook, please follow us. We're always doing FYIs on Facebook with some important information. And you can go to our website, click on the podcast gallery in the top right-hand corner of our website, getyourbestplan.com. Once you do that, there's a bar you click on the left-hand side that says follow. You enter in your name and your email address, and then every time we do a new webcast, you're going to get an alert that it's on there. Again, I apologize those who are enjoying the podcast and doesn't have to look at my face. I joked that I've got a face for radio. we're no longer doing podcasts, folks. We're doing webcasts. This is a new thing. So, I fought it as long as I could, but everybody's telling me I gotta put my mug on camera. So here it is. Again, tune into some more of our webcasts as we go along. They're going to be on weekly. Look for us to get into a little bit more stuff, a little more controversial stuff. If you like controversy, we're going to start getting into some of that too, bringing on some guests and interviewing them. Our goal is to pull the curtain back on the healthcare industry, which I feel is getting a little bit too expensive, especially the prescription drug issue. So we appreciate you joining us, guys. Tune in next week. We'll have another podcast based on the column, and we'll keep doing them, webcasts and podcasts. Thanks again, guys. Thanks for listening, folks. Join us again soon as we interview those on the front lines of healthcare, health insurance, Medicare, and our ongoing prescription drug crisis. My name is Aaron Zolbrod, and we look forward to helping you get your best plan at the health insurance store.